Hi everyone, and welcome to another segment of AEC+Tech Talks. These talks are organized by AEC+Tech, a platform and community established to help you stay updated and engaged with the latest tools and technologies within the building industry. Today we are joined by four fabulous panelists who are all experienced investors and innovators in the AEC and construction tech space. We are going to learn from their experience and insight, and we'll also ask them for their thoughts on the future of innovation within the built world. This event will be recorded and saved on our AEC+Tech YouTube channel. If you have any questions for our panelists during the event, please feel free to post them in the LinkedIn or YouTube chat box, and we will do our best to address them all at the end. I'm going to briefly introduce our four wonderful panelists now, and we'll let them talk more about themselves and their work. I'm going to start by Vivian Héctor. Vivian is a general partner at Zacua Ventures, an early-stage global venture capital firm focused on improving productivity and sustainability in the built environment. Vivian has extensive experience in the construction tech space, both as an investor as well as an operator, across his 2 decades of experience at Hilti, Trimble, and McKinsey. Welcome, Vivian. I'm so happy to have you here.
Thanks for having me. Good to be here.
Thank you. Our next panelist is John Andres. John is passionate about the future of technology in the construction industry. He's tasked with ensuring each Andres project is successful in their use of technology. He oversees Andres' use of systems like Procore, Instruction Site, SiteAware, Genda, Builder, TouchPlan at TopCon, survey equipment. John started with Andres working as an intern. Later, he worked both in sales and as a developer in commercial real estate before returning to Andres. Hi, John, and thank you so much for joining us today.
Hey, thanks for having me. Excited to be here.
Thank you. Our next panelist is Luis Sánchez. Luis serves as Corporate Development Director for Procore, where he oversees investment and acquisition in construction tech. Previously, Luis was principal at Rakuten Capital, investing in fintech, mobility, and telecommunications. Before joining Rakuten, he managed operations and new business development for the fintech startup Leno EFL in Mexico. Welcome, Luis, and so wonderful to have you.
Thank you. Thank you for having me.
Of course. Our next panelist is Tim Dumatrait. Tim is the new Corporate Development and Innovation Manager at Burns and McDonnell Engineering and Construction. Tim works with leaders around the company to set business objectives and invest resources in novel technologies or techniques for future growth. Prior to joining Burns and McDonnell, Tim served as Senior Director for Construction Technology at WeWork, focused on implementing emerging technologies and leveraging building data for project delivery through a combination of startup, partnership, and internal R&D. Welcome, Tim, and great to have you here.
Thanks for having me.
Wonderful. So we will start this panel by asking a couple of questions from our panelists. And in the meantime, our audience are welcome to post their questions in the chat room. So I'll start by asking Vivian to tell us about Zacua Venture, about yourself, how you ended up working as a VC, and yeah, just tell us about your work.
So my journey into VC is actually a culmination of many things in life that have just happened to come together over the last few decades. So I grew up in India. I was born and brought up there, and I had 2 passions as I grew up. One was gadgets and one was numbers. So but the first thing I did is I became a mechanical engineer because that's my first passion around gadgets. And I was recruited by India's largest construction company to go work there. As exciting as it seemed, I was like, I need to study a little bit more. I'm not ready to work. So I went and pursued my other passion. So I got an MBA in finance and economics. I ended up joining an investment bank. So I was trading in exotics and emission trading and stuff. I joined Deutsche Bank, spent time in London. And it was a lot of fun. But I spent most of my day talking in Greek. So what was it was Waltz and Gamma and Beta and all of that, and I was like, I need to talk to humans a little bit more, and I need some more interaction. So I ended up joining McKinsey. I joined the industrial practice. I spent 6.5 years there, and had experience of deploying technologies across the world. I was not in Africa, I was in Jakarta, Singapore, Chicago, a few other places. And it was very enriching. It's like a finishing school. You learn so much about building companies and stuff. But eventually you come to a stage where you don't just want to tell people what to do, you want to do it yourself, you want to own balance sheets. And that's when I transitioned to Hilti. And I helped lead the corporate strategy team there in terms of entering new markets, thinking about strategies for software, North America, and a few other areas. And it was a great transition. And this was also a point in time that Hilti was going through a transformation process. Hilti was thinking about where we are in our life cycle and whether we want to continue the way we are. But traditionally, Hilti had been very successful from a power tools perspective, materials perspective, but construction was changing because digitizing software were having a much more important part to play. And Hilti traditionally hadn't played in the space. So I was part of the team in which I set up the Open Innovation Office in terms of looking at how do we engage with the startup ecosystem to look at new trends, to understand how Hilti can tap into this. And as part of that, we did multiple different things. We did direct investing, we did fund investing, we did acquisitions and technology partnerships and so on. And in those years, what we learned is corporates typically struggle with innovation. What we did at Hilti was quite special, but it's also not normal for corporates to be able to spin off new business units based on ideas that could be implemented from open innovation tools. And that experience was also echoed by a lot of partners who were, for example, Cemex, others that we've worked with. And typically what happens is when corporates want to do innovation, they want access to deal flow. They go and invest in funds, right? Because it's the easiest way to access deal flow and uh, get the ideas that they don't have exposure to. But in general, what happens with VC funds is they are very financially oriented, and rightly so, because if they don't have financial performance, they won't have a next fund. So the incentive for funds is to be as successful financially as possible. Whereas for corporates, the incentive is not just financial, it's also strategic, because they invest to get access, they invest to understand the market better. They invest for a lot of reasons apart from just financial. And sometimes there's a misalignment in incentives. So one is looking for financial returns, one is looking for strategic returns. And for us, that's an unfortunate disconnect sometimes because startups, especially in construction, can get a lot of value by collaborating with corporates. Corporates can be customers, they can help in workflow, they can help give access to technology, but they are slow, but they have their bureaucratic processes. So if there's a which could be a layer between startups and corporates, to remove this friction away, then that becomes very powerful. And that was where Zacua was born. We said, okay, we need to have an entity which enables this because this becomes very valuable for startups. This becomes valuable for corporates because they get access to innovation. And as a fund, you become very valuable because you're not just giving capital, you're actually helping solve the most important problem. But to do this, you also have to have the right skill set. You need to have people who have understanding of corporates as well as startups. You need to have a global footprint because the trends vary by different geographies. And you also need to be early stage because that's where corporates need the most help in terms of the deal flow and startups need the most help in terms of software. So it's therefore available to put all of this together. So I had my two partners who came from Cemex. They're actually based in different parts of the world. So Mauricio is based in Madrid. Juan splits time between Singapore and Madrid. So we have a global footprint as a team. And we do early stage investing from pre-seed to Series A. And we have now backers who are there from across the world, from 4 different continents, all top 3 in the sphere of influence. So that is where Zacua is today, and would love to talk more about it, but I want to pause now, give a chance for others to speak, and we can come back to a discussion after that.
Wonderful. Thank you, and thanks so much. Yeah, we'll come back to you. Thanks for all the information. So John, can you also tell us about your company and yourself?
Yeah, my story is not as cool as Viven's. But yeah, so our company, we're a general contractor based in Texas. We work in Dallas, Austin, and Houston. We say we're in the business of putting heads in beds. So we do a lot of multifamily residential, hospitality, CCRC retirement centers, etc. We kind of got into investing more recently, probably in the past 2 years. It kind of stemmed from seeing some of these big public, companies like Procore going public, and then the companies that they're acquiring. And so we have been an early adopter in technology, and basically want to make sure as we are transition to an employee-owned company that those employees that are helping give us the feedback into this technology that we're doing, and that we're working closely with these softwares, that the employees are going to benefit from this investment that we're doing. So at the end of the day, it's we're investing for our employees, and that's kind of where we're going with technology right now.
Thank you, John. Luis, you're next.
Sure. So let me give you a little brief on Procore and then how I got involved into venture capital. So Procore, I bet most people know, it's the largest cloud-based construction management software in the world. We went public last year. And our VC investment is basically an extension of something that we've been doing, right? We have the mission of connecting everyone in construction to a global platform. And we want to solve all the needs of our customers, right? But we know we cannot solve them by ourselves. So we need to partner, right? So we have this app marketplace with over 400 companies there where we have open APIs and we connect. And VC investment was born out of that app marketplace. So we started putting some money. We have some of those partners in our startup ecosystem to help them grow, right? So that's how we started our VC investment. And we started last year. It's pretty brand new. We've done 7 VC investments so far, but we're looking forward to increase that. And personally, like my story is pretty similar to Vivan. So I did strategic consulting. So I kind of like solving problems and looking at different industries all the time, right? And then I ran a startup. And so basically I was doing things, right? Not just writing decks. And for me, VC was a way to bridge both worlds, right? So you get to look at very different problems, very different industries, and like something different every week, but you also get to do something. You get to help them create. So for me, that was a way to bridge those two, like the things that I liked the most about my previous roles. And that's how I came into VC. First, I did VC for a fintech fund in New York, and then I found out about Procore last year with their IPO, and I was like, okay, let's jump into an industry that's just getting started, and there's a lot to grow.
Nice, great. Thank you, Luis. Tim.
Yeah, so first I'll tell you guys a little bit about Burns & McDonnell. So we're an employee-owned engineering construction company, as you mentioned at the introduction. We've got a pretty lengthy history, date back to 1898, so a long track record in the verticals that we're in, particularly power transmission and distribution, energy generation, water, and other infrastructure types. More recently, getting into more of the facilities market, doing commercial building design and construction. So our VC activity so far has been a little bit limited. We're kind of new to this space. My role is also new to the company. Most of our investing so far has been as a limited partner to energy impact partners or EIP partners. So really just looking to augment a lot of the industry verticals we're already in and really get some access, as Vivan mentioned, to some of the great innovation that's going on in those spaces and make sure that we're first adopter, early adopter, and finding ways to differentiate ourselves. Personally, my introduction to this kind of work in VC dates back to my time at WeWork. So when I was there as part of WeWork's first acquisition back in 2015 of Case Inc. And joining, we spent a lot of time building out our R&D capacity, looked at in the acquisition, like with field document capture, or if it was just partnering with other folks who were in the Vision Fund with SoftBank, groups like Boston Dynamics, just trying to find ways to really accelerate our delivery process and get more product out into the market.
Great. Thank you so much, Tim. So my first question for you all is how you usually learn about these new technologies. What is your best source of discovery, and how do you keep track of the how do you keep track of all this like emerging technologies out there? So we can go by the same order, Vivian, if you don't mind answering first, and John, Louis, and Tim next.
Sure. So we actually have very different sources from where we get this. So I think the most trusted source is referrals. So we get a lot of referrals from founders, from other VCs, from innovation heads, and so on and so forth. So that's a strong source of deal flow for us, because we've been in this market long enough that there's enough name recognition for people to reach out to us in different markets. So that's actually a very solid source of deal flow for us. But we also have deal flow from being mentors at various forums. So, for example, I'm a mentor at Silicon Valley Robotics, at Alchemist, Greentown Labs, and a few other areas. And we help mentor these startups as they're growing. We want to be supportive to the ecosystem as they're growing up. So we get deal flow from there. Zacua is also the exclusive partner for Construction Startup Competition, which is the world's largest startup competition. So there's about 700 startups who apply to that. So we get deal flow from there as well. We have an existing database of more than 5,000 startups, which we built over the last 5 years. And we have access to a lot of founders there. So a lot of what we do is relationships that have been built over years. It's not immediate relationships sometimes as well. So we like to talk to people very early on. Then there's also conferences and other areas where we get inbound from. We have our own website where a lot of startups apply. They reach out to us from LinkedIn. So there's no one source. There's so many different sources that these come from, plus they're universities. So we work with a lot of universities, and there's a lot of good talent. It comes out of Stanford and MIT and a lot of other institutes.
Wonderful. Thank you, Vin.
Yeah, so I'm out at ENR Future Tech right now. This is kind of where I like to find software, going to the actual trade shows, meeting people face to face. You can tell a lot about someone by the way their sales team presents something in the short amount of time that you have. Basically, our VC side from there is we would implement that software, do a trial where I actually take that into the field and implement that on our job sites. And then from there, if it's something that we like or was something we see going down the road being a benefit for the construction industry, then we would approach about getting into the fund or getting into a seed round or so. But mostly in person at trade shows. I guess at LinkedIn as well. I definitely, anytime I find someone at a trade show, I'm following them on LinkedIn, and I think that's a great way to keep up to date on a lot of things. It's very hard to go to everyone's website and see what's changed.
Yeah, for sure. Thank you, John. Louis, how about you?
Sure. So it really depends on what size of the startup is, right? So for the early stages, right, we rely in startup competitions. We relied on LP, like we invest through LPs. I can also look at early stage companies, right? And as we mentioned, we have this global partnership and alliances team. So we have a whole team looking at companies that can integrate to the app marketplace. So right now we have over 400 companies, but they talk to thousands more, right? So that's basically the way we find companies. And also, I mean, we keep tracks of companies on Facebook that fill product gaps. So a bunch of different ways, but yeah, like having connections to the investors and to customers, talking to them, understanding what startups they're leveraging to fill our product gaps. That's how we identify promising companies.
Great, thank you. Louis, can you tell us a bit more about LPs and what you mean by LPs for our audience?
Yeah, so LPs is a limited partner. So Procore is actually an investor in a couple of in a couple of construction tech funds. One of them is Zacua, and so they have amazing deal flow. And we invested in another funds as well. So through those partnerships, we get to to leverage those resources to find more deal flow.
Thank you. Great. Tim, how about you? How do you keep track of the latest analysis?
Yeah, for one, very similar to what Luis mentioned, right? It's having relationships with funds like Zacua and Vivan is a friend of ours. So, looking at their deal flow, seeing who they're looking at and who they're interested in, and really having it be informed by some business need that we identify internally. So he can be a guide, they can be guides, the funds, to helping connect us with the right entrepreneurs who have some product in action. Another is just my own personal network, people I've had the good fortune of meeting as a practitioner of my time at Case and WeWork. That's been invaluable to stay in touch and see where people are going and what companies they're interested in joining and working for. And then also we've recently become a member of Built Worlds, which has built an amazing community. So similar to John, getting to go to these conferences and just get some face time and meet people and have them talk to you about their product is really great. As a user myself, it's the way I prefer to hear about the new tech. Have the people building it talk to you about it.
Great. Awesome. Thank you. So the next question is about the trends that you see in the space. So design and construction industry is infamously known as with regards to adopting technologies. So the question is, what pattern you see in the space, both in technologies as well as in founders that you feel confident in? This time we can start by Luis, then move to John, and then Vivian, and then Vivian. We'll change order a bit.
Sure. Yeah, I think there's a lot on that question. So, I mean, trends, I think what everybody's seeing is like labor shortage, right? That it's making companies having to do more with less, right? So that's the first stage of digitization. So you digitize processes, and then that's where we are right now. But once you digitize the current process, you can rethink those processes, and then you can add like financial services on top of that. So I think that's the trend that we're looking at. And also, like a lot of people coming into construction, they are used to like new technologies, right? Like new interfaces. Like they're millennials, they use they're used to like an attractive UX design, right? So those new people coming into construction are the ones pushing for innovation. And in terms of founders, I mean, the founders that I really love, I love all my founders, but the ones that I think that I try to identify are those that they're scratching their own itch, right? So they were probably working at a construction firm, so they come from the industry, they had an issue, right? And they created an Excel spreadsheet that will solve the issue, right? And then they said like, hey, somebody else could use this, right? So they left the company and created a startup around that. So those are the type of founders that I try to identify.
Yeah, that's great. As we started AEC Plastic from it, so now I feel great. Okay, awesome. So John, how about you? You see the space?
Yeah, so trends right now we're seeing like, okay, we've been Procore users for 13 years. So we've seen kind of the project management side of things. I think we've kind of hit, kind of topped out there. We're plateauing at the project management side, right? And I think the next side that we're starting to see is how do we optimize the field, both, by giving them workforce tracking, AI assisted counting for things, making sure things are in the right place, 360 captures, reality captures, the things that are making the field more efficient is kind of where I see the trend going right now. We've got some pretty awesome stuff that's coming out right now that are actually taking time, like saving people time in the field, real time, 4 hours, 5 hours for things that they used to do. And so that's freeing up more people, allowing us to be leaner. I always tell our guys in the field, if you watch a Formula One race team back from the 80s, that you'd have the same amount of people out there changing their tires, but it took them 5 minutes. And now they can do it in 2.1 seconds. And so it's the same amount of people, but we're able to move faster. So it's a leaner way of thinking. As for what we're looking for in founders, I like charismatic people that I enjoy talking to first and foremost. The product has to be there, but the founder needs to be able to carry on a conversation, not feel too salesy. I don't like when people come sales first. It's very much needs to be relationship, and what can we both do for each other, and then get into the sale. I think that's very important, and a lot of people right now are just trying to, come at you so fast with the sale, and it's, take a step back sometimes.
Yeah, for sure. Thank you, John. Tim, how about you?
Yeah, I think for me, a lot of the old problems are still there that need to be solved. I think there's a lot of value in being really serious about change management and being focused on that, especially with the explosion of investment that's going on in new tech and the amount of new tech that's being built and created. It's really easy for users to get fatigued and not really know, what's the strategy for moving forward with this stuff and implementation. But then beyond just the initial training and support, how do you have a team of people who are expert technologists who can really stick with the implementation long term and make sure that the uptake with the users sustains, and then just people that are there to listen carefully, so that we can be good partners to the startups, giving good feedback, making sure that they're getting the feedback and that we're helping them evolve their product. We're really focused on just being good partners in that way. Another big aspect I see is just the massive strain on IT, right? With all the new data that's being generated and at such vast quantities, especially for large, diverse enterprises like ours. How do we, we don't have endless technology and R&D budgets like the Googles of the world. How do we make sense of all this information and bring it to commercial application? I think that's a big problem yet to be solved that we're focused on and really interested in.
Awesome. Great, thank you, Tim. Vivian, how about you?
We see a lot of trends, but these trends sometimes vary by geography. For example, labor is a problem that exists in most parts of the market, but it's much worse in, say, Japan or parts of North America than it is in other parts of the world. Sustainability is a topic that's much more entrenched in Europe. You see a lot of things happening around that. And US, it's not yet there. It will probably happen in course of time, but today it's not yet there. Then there are trends around improving efficiency. So topics around productivity is something that's prevalent everywhere, right? Anything that you can do to either automate the process or have less people do the job. The reason is that we don't have enough labor coming into this industry, and the existing workforce is aging. So you either need to augment them or you need to maximize the efficiency so that jobs can still be done. So pretty much 90% of construction projects would have some form of labor shortage that they're facing today. It got worse during the pandemic. It's improved slightly, but it's still a big pain point. So this is where we see a lot of stuff happening. And the way we look at construction has also gone through phases of technology adoption. So we had initial adoption of just conversion from analog process to digital processes. So the early stage, the plan grids, the field wire, Roombix, initially, what they did is they converted the analog process to digital processes. Then we had the platforms. So Procore, for example, was one of the premier platforms that started integrating all of these niche applications into one platform where multiple applications exist. In the future, we see the move to analytics. Now that you have platforms, you have data which is not completely siloed, you can start doing analytics and truly improving the processes, truly improving the efficiency of various areas. Today, analytics is mostly done for specific applications. The global analytics still hasn't yet taken off, but that we see as a growth area for Contech in the future.
Awesome. Thank you, Vivian. So how about founders? What patterns do you see in founders that you feel comfortable in?
So there are a few things that we look for in founders. The first and most important to us is understanding of the problem, right? So typically when we look at founders, it could be a mix. It could be people from construction. It could be people from outside of construction. It could be a mix of people from construction and from technology. We think it's important to understand the pain point because otherwise you're not able to solve it. But it's also important to understand the technology you're bringing in because that is driving your differentiation over a period of time. So the best founding teams have both of these. So that is because we are early stage investors, the founding team is really, really important for us. But also the pain point itself is interesting. Is what they're solving, is it scalable? Is it something that could differentiate? Because there's a difference between a business and a venture-backed business. A business could be profitable with a small TAM that you have. You could run a good company profitably over a period of time and be viable. But for it to be venture backable, we need supernormal growth. We need large markets. We need scalable applications. So that is also something that we look at. And once we have these two in place, then we talk about, okay, how is it adapted to the workflows that people are looking at? Is that because adoption is a big risk in construction? What are they doing to make sure this product is usable from the market perspective? So those are things that we start to pay more attention as well. And I can go on more in terms of metrics and other stuff, but those are more details. But the first two, three things is what I spoke about.
Wonderful. Thank you, Vivian. We have a question actually related to what you were talking about earlier. So Francisco Pampani, sorry if I'm butchering your name, is asking, what's the most important thing you look at in a pre-seed round when a startup is pre-sale and pre-revenue? So also the question here as well.
I think you're muted, Vivian.
We can't hear you. Oh, we can't hear you actually. Did something happen to your headphone maybe? Oh, we lost it. Okay, so if you have any comment about this question, please go ahead and answer here while we are waiting for Vivian is back. Oh, you're still. I'm not sure. I'm not sure what happened. Maybe something happened to your computer or.
Well, I'll stall for Vivian, and I'll answer this question honestly from our perspective.
Sure.
Being as our involvement is more limited in early activity. We do like to partner with early stage startups, but we don't particularly favor taking direct investment that early. But that being said, as an extension of Vivian's answer, I'm partial to founders who are coming from outside of our space, just because I really like people who are coming from a pure technology background, who have teams with great capability, but maybe aren't so aware around our industry practices. Because I really appreciate the fresh thinking that we're kind of coming back at the questions in an unbiased way. And so I'm super interested in founders who are super interested, super energetic, but are kind of unbiased whenever they're coming at our problems.
Great, thank you, Tim. Vivian, we still can't hear you, unfortunately. Try one more time.
One more time. Can you hear me now?
Oh, perfect. We can hear you now. Yay.
Awesome. Sorry about that.
Great. No problem.
So if it's a pre-seed round, the things that we would look at is, one, as I said, understanding of the problem. Is they are the best people to be able to solve this problem, right? Either it is experience in the segment, they would have worked in construction and solved those applications and have started building something, or is experience in the technology, saying, okay, they have done some research because of which they have a solution that's better than anything else in the market. So those are two things that we will look at for sure. And then we look at the founder skill sets itself. What's the willingness to learn? How much time are they spending talking to customers? What kind of R&D are they doing there? So we still want some semblance of product. We don't want it to be just an idea. It's okay if they don't have revenues, but we do want them to have some semblance of product where they're starting to get feedback from customers. We want that commitment. We want them to make sure they're going to put time and effort to make this successful. So those are the things we will look at pre-revenue. Pre-product is a little bit more difficult because then you don't have much to go by. Then it's more just the founders in the background. But then that depends on relationships. Are they a repeat founder? Have they done stuff before? Have we seen track record of them being able to execute and build large companies? So the metrics differ slightly for pre-product.
And just to add to Vivian, I mean, there are different funding sources depending on your stage, right? So if you're pre-product, normally we will expect you to go for a friends and family round, right? Or you can apply for a competition, you can apply for an accelerator. So that that will show us some semblance of traction, and then you can get into a seed round.
Thank you, Luis. John, do you have any other comments?
I don't think I have anything else to add to that. They kind of nailed it.
Awesome. Great. So our next related. So what do you think is the best way for young entrepreneurs, young founders out there especially in the AEC space, to learn about the fundraising process? And so this is the first part of the question. And the second part is, at what point do you think the founder should plan for fundraising and look for investors and connect to the right investors? So we can start by maybe Tim this time. Tim. But any of you,
defer to Vivian and Luis on that answer.
Yeah, it's definitely a Vivian Luis question.
Sure, yeah. So Luis, what do you think?
Yeah, so I mean, as I mentioned in the previous answer, it really depends on what stage you are, right? So like I've seen a couple of companies, especially the ones that I was mentioning, right? Like they're scratching their own itch, right? So they start putting together something, and they're able to go into like a friends and family round, or like even better, some of the clients that they are selling this solution or pitching the solution. They say, hey, this is great. Let me put some money into it, right? So normally I would expect friends and family and then customers to be the first money in. And then once you decide to go into an investor, like a VC investment or a corporate, it's when you have a clear roadmap, or you know, like I need this much amount of funding to reach this milestone. That's when you can go to an institutional investor. But yeah, that's the way I will approach it. And many companies, like as I was mentioning, like the ecosystem is getting more sophisticated, so they can enter like contests, competitions where they get funding that is non-diluted, right? So that's a good way to get started.
Sure.
I agree with everything that Luis said. So you had the first part of the question, which is about where do they learn from it. They can talk to entrepreneurs who've raised before. They can talk to accelerator programs where they get this information. They can reach out to VCs. VCs are usually very open to having conversations with early stage startups, and they learn from them. But before we get into when they should raise funding, I think it's very important for founders to understand why they're raising funding, right? When people want to go for VC funding, is it because you're going to build a company that is going to experience supernormal growth? Have you done enough research to prove that this is going to be the case for this kind of market? How do you have enough conviction that this is going to be a really big company? Because anytime you raise capital, you're giving away control. You're giving away a part of the company. And there has to be a good reason for doing that. For the earliest stage founders, I would say you don't need to have diluted capital till the time you really need it, right? Friends and family definitely is interesting. Grants is interesting. Loans are interesting. So you want to get to a stage where you've had time to develop a product before you really look at institutional funding. The reason is that VCs have their own timeline. VC are usually 10-year cycles. We call them 12, 13, 14-year cycles, but they have cycles. So when you take VC funding, your clock starts. There's an exit that is expected out of you in this period of time. And if you're starting from scratch where the product is not at all developed, then it puts too much pressure on the system for you to move fast when you're not really ready. So you want to put that effort before you take institutional funding. And once you get to a place where you have enough confidence, you might raise because you need more capital because it's hardware intensive. You might raise because you want growth, you want to put go-to-market in place. But you raise for milestones, as Luis said. And you need to have an understanding of why you're raising before you go through that process.
Right.
And kind of, if I could echo Vivian a little bit, I think the other thing that's been really exciting to watch is VCs that are getting more direct experience in our domain, like Zacua, who can be good advisors. Taking your money from people who can actually give you good advice and help you is really valuable, not just taking money from anybody.
Great. I mean, I'm wondering if there is such a thing as like the right investor for a company or the wrong investor. So how are people supposed a VC company is the right investor for them, or if it's not, and if there is such a thing at all?
I like to think everything we invest in, we're the right investor for because we're kind of the user of it.
Yeah.
So,
Yeah.
you know, we don't
Yeah.
we don't really invest in things that we're not going to use. So, we're always the right investor.
I'm sure you are.
Yeah, from our perspective, like kind of like John, we're really conservative. We don't invest in just anything as just a side project. We invest in things that have clear direct application in the industry verticals that we are already in. So we're really application focused. And a lot of our business leaders around the company, since we're increasingly in Europe, they're empowered to make direct investment on their balance sheets as well. So having really regional knowledge of the application of the stuff we're investing in is really important.
When you think about taking investment, you're taking it for a few reasons. And this also changes based on your stage of development, right? When you're very early stage, you're obviously taking for capital, for survival, for cash flow, but you're also trying to bring the right set of advisors on the table. So investors can help you and think through your workflow in terms of building a product. They can help you in building your organization in terms of what are the processes that you need to be put in place. They can help you with hiring. They can help you in introducing you to customers, right? And some of the investors will also be on your board. Are they giving you the right kind of advice? So you need to figure out what are the skill sets that you're looking for that would strengthen your organization, right? And this could change over a period of time. For example, an early stage investor or an early stage startup would be thinking about product a lot more. Will be starting to think about go to market. But a later stage investor will be talking about, okay, how do I secure follow-on funding when we are scaling rapidly? How do I get better unit economics for what I'm doing, right? How do I prepare for the IPO at some point in time? So it depends on what stage of development you are in and what skill sets you're missing. So you might have some missing skill sets in your founding team, and you want to lean heavier in that space in terms of getting that exposure. So it has to be thought from that perspective, and it could be different for some startups. And of course, Zacua is always a good investor.
Yeah, I'm sure it is. Awesome. Luis, do you have any other comment to add to this?
I mean, I would just add to just echo what everybody else said. I think you need to look at what other things they're bringing in besides capital, as Vivian mentioned. And also, I think there's a strategic element to it, right? Like VCs and corporates, they provide different things, but they also require different. They can put some limitations, right? So, for instance, like some corporates will be less valuation sensitive, right? But they'll have like letters that are pretty stringent, and will limit your like exit options on the road, right? So those are things that you need to consider. So it's not only like how much and at what price, but it's all the conditions around it. Right?
Yeah, definitely. Awesome, thank you. So the next question is about the factors that you research for when you research a particular product to invest in. So when someone approaches you, so what are exactly the important factors for you that you research about that product? And do you ever talk to potential customers, users? Does that matter to you? So we can start by John.
So I'm the potential user,
The user. Yeah.
that gets to use this stuff. So it's kind of a really cool a cool thing. I think some more general contractors are getting into it now, but it's a great way of investing. We feel very safe in how we're making these investments, very smart investments, because we're buying into them so much as a client, as a user, and we're in turn we're providing that feedback to the startup, helping them develop things. It's something we did with Procore a long time ago. I still have screenshots of Procore back from 10 years ago when we were asking for feature requests. And those are like things that are ingrained into Procore now. And so those are things that we like to do in order to, help grow those. And so we feel safe in our investments there.
Awesome, great. Thank you. So team, Vivian and Louis, you can go by the same order.
Yeah, I'll jump in on the back of John. I think, for me, it's not just the product. I agree with that. Like, we want to get hands-on with the product if we can with our users who are going to be implementing it. But also just meeting the founders and knowing the core team around the product is super important to us. I mentioned earlier, right? Like, I'm super interested in people that are coming from a little bit more of a pure tech background. Not that I'm disinterested in people that have domain experience, but I just think it's really refreshing to have people coming in unbiased who are willing to change their product and adapt their product to suit our needs a little more.
Vivian.
So we look at 4 things when we're evaluating startups. The first thing is the problem itself. We look at the problem and say, is this a pain point that we identify? Is this a pain point that we think needs to be solved today? Is the timing right for solving this? And do we think this problem could be scalable if it's done right? So that's the first thing that we look at. The second thing is the team itself. We look at the team and say, hey, where do they come from? What's their background? What's the founder market fit? Are these the right people to solve this? Do we think they can run a successful company, which could be a pretty large one? And how do we think the trajectory would go, right? Are they willing to let go of control? Are they willing to learn, and so on and so forth? So that's the second thing that we look at. A third thing is we definitely talk to users. So if I had something that John was using, I would go to him for sure, or Louise or Tim. We talk to customers all the time. We also like to go to the job site. So we look at the demos quite often when we go and spend time there, right? And finally, we also do reference checks. Reference checks either from customers or from previous investors or from prior experience of what the founders have done in other places and so on. So we are quite thoughtful of going through that process. And once these things are done, then we also do the financial analysis and figuring out what works from a valuation perspective, looking at the data room and so on and so forth. So it is a fairly detailed process that we go through when we analyze startups.
Great. Thank you, Vivian. Louis?
Yeah, I guess if I were to summarize our investment thesis or like the 5 elements that we look at, we call them the 5 M's. So the first one is the market, whether this is something that's big enough and there's a problem that's worth solving, right? Then the management, if it is a team that can solve this problem. Then the magic, so the product, what's actually doing. And something really cool over here is that I have my product team that can assess, whether this is something that's actually solving the problem. Then the 4M is momentum. So what's the traction? And that's something really cool that we can also do, because I can see if they're connected to the app marketplace, I can see how many customers of ours are using them to solve a problem, right? And lastly, the money, like what's the valuation? And here we rely on a lead investor. So Procore doesn't lead rounds, so we don't price rounds, right? So we rely on the lead investors to negotiate the price for us. So we outsource that. So.
Thank you, Louis. So a question for Louis and Vivian from this items that you mentioned. Which one has the heaviest weight for you? I know that they're all very important, but which one do you see as the most important if you want to pick one?
I'll let you go first. Go for it.
Yeah, also it really depends, right? Because Procore is not a traditional VC, right? So we invest because we want to solve a problem, right? So the magic, I think, is the most important part, right? Because it really depends on the strategy. So if we think the product is really good, but it's not selling well, and they have a problem with their sales team, we can support them with that, right? So, but if the product is not there, then there's nothing we can do about
it. For typical VCs, the answer is very simple, and we'd say it's founders. For our stage, it's almost always the founders, right? In our case, it's a little bit more nuanced. We say, yes, it is founders. So if you put a gun to my head and said, what's going to be the one thing that you say, it's going to be founders. But the market itself is also important. We need the problem that they're solving is important, because timing in our industry and adoption in our industry is not easy. So they're close 1 and 2. but eventually it's still people, because you can pivot. If the founders are really good, they will make it happen over a period of time. So that is critical to us, but the pain point that they're solving is a close second.
Yeah, that makes a lot of sense. Awesome, thank you. So we take one question from the audience. So Al Dram is asking you, what is the best way to connect and start talking to VCs? So you mentioned attending events, conferences, referral. Is there any other way for a young founder who doesn't necessarily have like a network of other and doesn't even know about like the most popular events and conferences? So it's the best way to connect to VC.
We are very friendly, so you could actually reach out to us from either LinkedIn or from a website, and you'll definitely get a response. You'll get a faster response if it's a warm intro. It's just because we have so many inbounds, it takes us a little bit of time to get back to everything. But we are very founder friendly. If you send me a LinkedIn request and you're a startup founder in contact, I'll most likely accept it.
Yeah, I would add to that. It's like you need to. You also need, your product, your company, so you kind of should know who a good investor will be, right? So like I get a bunch of requests on my LinkedIn for things that I won't invest because they're outside of my vertical, right? So like one good way to find out, like who these good investors are is you probably, if you're a founder, you're already tracking companies on the segment that you like admire, right? And they get funding. So see who those investors were, and then just go and contact them. And I mean, investors can be rich like anywhere, right? Like on Twitter or LinkedIn. I mean, they'll respond back if you have something to offer them, right? But if, like sometimes I get, like proposals for like a flying car, it's like, no, man, like that's not something that I do, right? So.
Yeah.
So those will be on
You should
construction
do that.
sites soon.
That would be interesting.
Yeah, who knows? Maybe one day AEC.
Yeah, and from our perspective, as on the corporate side of venture capital, to Luis's point, right? You should just stop in on the website and see, what are our industry verticals, what industries are we active in, and where are we active regionally? And if you feel like you have some application, reach out, right? Like if it's relevant, we'll get back to you.
Wonderful.
John, you're saying something. Sorry, I cut you off.
Oh, I was saying I can't wait for flying cars to be on our job sites.
Yeah, for sure. I love the idea. So John, do you have any other comment about this question? What is the best way to contact you? Like LinkedIn?
Yes, I'm not your traditional VC, but yeah, LinkedIn is a great place to reach out to me. Actually, one of the last people we invested in started from a LinkedIn message, and it was really cool because we go back to it now and we look at it and kind of laugh about how he reached out. But it wasn't salesy out of the gate. It was something that was providing value to me, and started with a conversation or a question to kick off that conversation, rather than trying to be just very forward with, hey, here's how we're better than everyone else. It's, hey, what are you doing to do this, right? Lead me into that. I'm going to be much more responsive to wanting to learn from you, rather than you just shoving everything down in the first message you send me, right?
Yeah, for sure. Awesome. Thank you so much. So we have 5 more minutes. So last question is about regret story or success story. So did you ever refuse to invest in a company or product and later you regret the decision? And please also tell us a story that you were really happy investing in a company or product and how it happened. So maybe this one we can start by maybe John, Louis, Vivian. So
the sad story is, yes, we wish we invested in Procore, right? They IPO'd for 10.6 billion, and we were there very, very early on, and that's probably what's motivated us to not let that happen again. And so, yeah, Procore's the one that got away.
Okay.
Yeah.
Okay.
I wanna
Thanks
be
for
buyer
sharing
now.
with us.
You can still buy some stock right now.
It's true.
Great. Okay. How about success story, John? The positive side.
Positive side. So we're invested in four companies right now. We don't push for an exit anytime soon. So the positives are more from the change of the product, and seeing the product build has been the most rewarding part so far of the investing side. Hopefully one day we'll make some exits and make some profit, because that's what we're trying to do, is increase the value for our employee owners. But other than that, until then, the growth of the product is really cool for us to see.
Awesome. Great. Thank you. So, Tim, about you.
I'd say this was probably my time here is more limited, but in my recent past, I guess at WeWork, Honest Buildings, I think, was a regret. I think we had some early access to that product, great founders, great product, market fit, and I believe that was later an acquisition by Procore. Now it's Procore Financials, but missed out on that one.
Okay. How about
success stories. So I mentioned earlier, we acquired FieldLens, which I thought was really amazing. And a good example, I think, of Luis alluded to the role of corporates in this environment. Like, we have a different motive sometimes as to why we invest. It's not necessarily to go to future exits or future rounds. Sometimes it's more strategic, and we want to use the product ourselves and maybe even bring it in-house. So having the FieldLens team join our team for doing document management and project management directly was a real revolution for internal operations to have that level of access to information and to be able to scale it. So I thought that was a good success.
Wonderful. Thank you, Tim. So, Vivian, you want to go next, and Luis?
Sure. If you talk about regrets, I have like a laundry list. I have so many that I wanted to invest and I couldn't invest, and that's why I'm not in corporate venture. I'm in financial venture now. I can invest in anything I want to. I don't want to name them because that will reveal someone's Hilti strategy on what they wanted to do. But there are at least 15 investments that I pushed really hard, and I was said they told no every single time. But hopefully that doesn't happen to me now with my partners. In terms of success stories, there's a firm called Fieldwire that we invested in early on. So Hilti, as I said, was never a software company. So that was one of our early risky bets. And that is proved transformational to the company. They just acquired the company Fieldwire last year. And it's completed a circle from Hilti starting to be just a hardware player to dabbling in software to now completely having software as a standalone business, which is changing the direction of the company. So, and I couldn't believe Hilti would be here where it is even 5 years back. So the amount of change that has happened there based on that relationship is phenomenal. And it's also a great fit for the founders, for Hilti and everybody involved. So that's like a super good outcome, and I'm very happy with how that's worked out.
Awesome. Thank you, Vivian. Luis, how about you?
I mean, on my time of Procore, it's been a little short. So, I mean, on the regret part, I mean, we still don't have regrets, but we're pretty paranoid about it, right? So that's why we're having this LP strategy, so we can have more eyes and ears out there trying to single out what's the new success story. But we're pretty sure that we'll have a couple of regrets down the road. And then on investing success stories, I mean, we don't want to single out any of our portfolio companies, but we're pretty happy with them. Like they've gone from like a seed and pre-series series to Series A. They've been able to bring on board like institutional investors like Zacua, and they're doing well. So, and it's going to be like a challenging time for startups right now, and but like the good companies still can get capital. So we're pretty happy with them.
We're pretty stoked with Document Crunch as well. I would have mentioned it, but it's only a 3-month-old investment. But we always think of them as a rocket ship. So
I mean, that was a success for us, man, because you came in and.
Hey, that was a success for my dad too. He was just at the beach 10 days longer. because he had document crunch. So he's loving it.
Yeah, he's a great founder, Josh.
Yep.
Awesome. Great. Thank you so much. Special thanks to our dear panelists. Thanks to our audience for today. We all learned a lot from your experience, your insights. Thanks for your generosity in sharing all that with us. So we hope the rest of the day. Have a great weekend, and we encourage our audience to reach out to you on LinkedIn, as you mentioned, and for their. Sorry if we couldn't answer all the questions. Thanks again, and hope to see you all in person at some point, and have a great rest of the day.
Thank you so much. Thanks for having us.
Thank you.
Thank you.
Thank you.
Of course, pleasure. Bye-bye.